Well, everyone remembers the tech bubble, and we often look back with wonder at the obvious excesses: IPO mania, sky-high valuations, and companies with big promises but no profits. Could we be sitting in a similar position today? Well, in today's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Watch producer Kelly Leon to talk about the current tech environment.
Thanks, Peg. Hi, Mike.
Good morning.
So first segment, I'm talking about beer. Now I get to talk about the tech bubble. So let's cut to the chase. Are we in another tech bubble?
Well, we're certainly starting to hear a lot more about that. And, Peg really kind of hit the nail on the head, when describing a lot of the hallmarks that we saw in the late 90s. And, when you look at the landscape today, we are starting to see some parallels. So, it's always difficult to see when you're in the middle of it. When you look back in 2020 hindsight, it's like, oh, that was obvious. How did we miss that? But, you want to make sure that you remember the lessons of that period and then see again if we're seeing any similarities today. And then also, we always want to be careful when we start hearing four of the most dangerous words in investing, which are, it's different this time, because usually it isn't.
Yeah. So what are you seeing? What specifically are you seeing?
Well, sure. So, like I said, a lot of parallels out there. Important to keep in mind that we're not talking about the Microsofts and the Intels of the world this time around. They're more like blue chips today, not like they were back in the go-go 90s. But the next generation of tech stocks, we're starting to see the same kind of sky-high valuations that we saw back in the late 90s. It's not uncommon to find a price-to-earnings ratio of 100 or 200, which is off the charts. And that's if there are profits even to begin with. So, those are similarities that we saw. And of course, as Peg mentioned, IPOs skyrocketing on the first day. That's kind of reminiscent of the late 90s. So those are some parallels. But what's getting a lot of media attention, what we're starting to hear more of, are what are now called the unicorn companies and the problems that they might present.
Unicorn companies, yeah.
Right. It's not really an everyday word.
No.
It's a relatively new term within the tech industry, but it's describing startup companies that have raised $1 billion or more in funding. And so think about that, a startup company funding $1 billion or more. So there's a lot of them out there now, estimated between 50 and 100. So we're not talking just a handful, but a lot. And many are well above $1 billion, sometimes 25, $30 billion. So
wow.
Yeah, and names that we're very familiar with, Uber, Spotify, Pinterest. But important to remember that these are still private companies. They haven't had their IPO yet. They're backed by venture capitalists who eventually want to get their investment out of that, which means an IPO. And therein comes the worry. There's a lot of hype, but does the substance back up these very high dollar prices? So just to put that in quick context, there are a lot of publicly traded non-tech companies, been around for decades, highly profitable, and names we're familiar with every day that aren't worth 25 or $30 billion. And on the other hand, you have these startups just beginning their business, not profitable, might not ever be profitable, and they've got these huge price tags. So
interesting.
Have we heard that before?
Yeah.
Where did we see that? So, in the end, none of it means we're definitely in a tech bubble. It definitely doesn't mean that we're going to perhaps melt down the way we did in the 90s, but there are some things out there to be a little concerned about, to keep an eye on, and just to be aware that sometimes history repeats itself.
Learn from the past, definitely.
Right.
Mike, thanks so much.
Well.